Welcome back, everybody. We are going to do another micro video here on the final two tabs of our spreadsheet. We're going to be talking about business revenue and then rolling everything up into the business pro forma. So Hank, take it away.
Great. Thanks, Lori. Okay, we've covered a lot so far. We're coming to the end. And now we're going to talk about business revenue. Now I'm going to go back to learning module number 1 and then subsequent learning modules that talk about business planning, account management. Where am I getting my business from? When you start a business from scratch, from zero, you got to understand, where's this business coming from and how much can I get on a monthly basis? And so that's important. So that's kind of on a sales and marketing side. This is kind of on a financial side of the table that starts to go, well, how can I get my business? This is not something you want to guess at. This is not something you want to start the business and cross your fingers, cross your toes, and hope that I get the work. You want to have a plan on how to do this. If we look at this, in this example here, we're going to start right here with billing rate. So we've plugged in and we said, hey, I can do a billing of, if I take my cost and I mark it up, I can bill out at $125 an hour. Your rate is going to be your rate. And in month 1, I can sell 100 hours. Now I'm going to tell you, if you're a steam fitter and you're starting a mechanical contractor, or you're a plumber, you're starting a plumbing business, 100 hours that you can sell out of 160 hours is aggressive. I think a better number might be, well, I might only be able to sell 80 hours, 50%. We talked about this previously. Doesn't matter how you do it. For this example, we're using 100 at 125 an hour. It's costing me $79 an hour. Month 1, oh, look it, I can generate about $12,500. Whenever you look at financials in business, don't get your brain wrapped around how I can do this over a year. It's just too complicated. It's the forest for the trees example. Break it down into 1 month. How much revenue can I look at it per month? And so, if you think of a restaurant and you think, how does restaurants make money? Well, they look at it maybe by how many tables I can sit in an evening. Well, I can sit 20 tables and I can generate X amount of revenue per table. And then how many nights a week am I open? You got to do the same thing on the mechanical contracting world. You got to start to look at, well, how can I do this? How I can generate work. So if you look at this, 12,500 at $100 an hour at $79 in cost. I got a labor cost of $79. My material is marked up 30%. Maybe yours is marked up 50%. Maybe it's marked up 10%. That I'm using $500 and well, there we go, $4,100. Now I will tell you, if you're starting a plumbing business, you need to understand how much material and equipment is associated with your labor. So there's a formula there. You got to figure it out. I can't do it for you because it varies on the type of projects you're doing. But in this particular case, 12,500 in labor, and I've got 500 in material. And so labor and material costs, I'm making $4,100 gross profit on that work. It's as simple as that. Now, you may say, well, $500, that's not a lot. It would be more than that. Well, it might be. That's okay. Just plug in what you think is the right number. So if you look at this, month 1, I only have 100 hours to sell. And if you're a one-man shop, that's fine. If you're a 5-man shop, then calculate it differently. Now I go to month 2, I'm at 160 hours. I got a full-time person. Now I'm going to tell you again, very aggressive. If you're starting a plumbing business and you are running the business without a lot of support, and you're also doing the work in the field, it is highly unlikely you will be able to go from 100 hours a month to 160 hours a month in the second month. You may not get to 160 hours a month until month 4 or month 3. I started a division, a plumbing division, before we had plumbers. We had sheet metal and piping and fire protection and temperature controls and electrical. But I started a plumbing business, and I could afford to let this ride for a couple of months without making any money. I mean, I could do it. It wasn't a problem because I had other resources and I had somebody feeding work to the plumbing division. So all of my service and HVAC people were like, hey, I got a plumbing opportunity. So I could ramp this up really fast. If you're starting from scratch in a new business, hard to ramp up this fast. But maybe you have been in the industry for 10 years. You got a lot of customers out there that have said, hey, listen, if you're starting a new business, I will give you work. That's great. Or if you're starting a new business, you know, general contractors that are going to give you work. You've got to sit down in a very honest format and start to figure out how many hours a month I can bill for, not collect, bill for. So as you see here, it starts at 100 and it ramps up in month, if my eyes are right, 6 or 7, 320 hours. So it went up from less, you know, like a half a person to 2 people in 320, which obviously means you're hiring somebody. You're not executing 320 hours worth of work. I would say if you're doing 320 hours worth of work and you're doing that in month 7, I think that's what that is, you might be hiring 2 people. They're the ones that are executing that, and you're focused on running the business. But it doesn't have to be that way. But that would just be my overall reaction to this. So you start to look at this. Since this goes up, sell hours goes up, so does how much you're billing. As you can see, that's climbing. And so does your profit, 4,100, 7,550. And you get to the end and it says, wow, I made $167,000 in a year. Gross profit. You haven't taken expenses out of this yet. You haven't paid your legal fees. You haven't paid all this other stuff. You haven't paid your loan back that you borrowed from. You haven't paid your insurance. You haven't paid the government taxes, unemployment tax. I mean, it just, the list goes on. So we take all of this. I'm just going to slide back to this one. Take business expenses plus revenue, and we roll this into one big spreadsheet. Now, I will tell you, this is a busy spreadsheet, but I want to show you something. Month 1, right here, you lost $28,000. Well, it makes sense because you just didn't generate the revenue. You had all those expenses. The amount you lost dropped down in month 2. And as you can see, it's dropping down. You're starting to make some money. Okay, so the losses are reduced. But look, month 1 through month 11, you never made a nickel. Not a nickel. Guess what? You paid a lot out in those 11 months. You paid your attorney, you paid your accountants, you paid union commitments, you paid all kinds of stuff. You didn't make any money. Guess what? You don't make any money in this spreadsheet until month 12. That's when you finally make some money. Overall, you've lost $74,000. It is not uncommon when you're starting a new business that you will lose money in year 1. It's not uncommon. Here's what bankers want to see. Here's what accountants want to see. They want to see the roadmap. What they don't want to see is a roadmap that shows I'm profitable in month 4, and turns out you're not profitable until month 12. So they want to see that roadmap. That makes them feel comfortable that, like, wow, this person really knows what they're doing. They thought the process through. They understand where they're getting their business from. They understand what their expenses are. It's imperative to understand you have to build a roadmap. It starts with, where are my accounts? What accounts am I getting? And where am I getting work from? And what my expenses are, what my cost is, what is my labor cost? What is my vehicle cost? So this is your roadmap. Think of it, and I'll date myself a little bit. Try to drive from New York to California prior to the internet if you didn't have a roadmap. Kind of hard to do. I mean, it just is really hard to do. This is your roadmap. This gets you to where you need to go. We've kind of beat these spreadsheets up. I want to go back to the PowerPoint and I want to talk about cash flow, because all of these spreadsheets show cost and profit, doesn't really get into cash. And cash is kind of an important component to running a contracting business. So we're going to stop it here, and then we're going to resume the PowerPoint. And this time, same PowerPoint as before, but we've got 3 or 4 slides at the end of that PowerPoint strictly talking about cash flow. Thank you.